What's up, ladies and gentlemen? I hope you're all having a blessed day. I know that I am for sure. I figured I'd come on here and make the annual Starbucks earnings reaction video now that I feel obligated to make. And this is a bit of a different one because Starbucks is no longer. I'm gonna resign as the Starbucks cult leader. I've officially announced it. It's just kind of hard to own this company these days. I'll be completely honest. When there's so many better options, I could index my money. I feel like in years past, I was just justifying reasons to own the company. But it's kind of grown as a person and investor more so. It's just it becomes harder to own this stock. I'll be honest. So today I'll be giving my reaction to the earnings. I'll be reading over some stuff. I'll also go over some financials on FinChat. If you guys are interested in using that, go to the Cashflow Kings and use our link there. But the stock is up 8% now today. Was I shocked? I predicted it. I literally said on Twitter, I'm like, Starbucks is probably going to have shitty results. Still, something's going to have the stock going up. I don't know what it is. From what I've seen, it's this that the CEO sounds confident. So, don't know if that's a reason the stock should be up. 25% from its low, but here we go. They said that its same-store sales fell 4%, fueled by a 6% decline in visits to its stores. So that's obviously really good news. Brian Nickel, who's getting paid $96 million a year, you can debate whether that's worth it or not. He's definitely a big part of the whole bull thesis right now, and that seems more like gambling when you can invest in the index and get it guaranteed. For the one that I'm investing in, it's pretty much 10 to 15%. So you got to keep that in mind. So same store sales slid for the fourth consecutive quarter. Obviously, great news there. But the company's quarterly earnings revenue beat Wall Street expectations by like 2 cents for each, or by 2 mil. It hit EPS by 2 cents off the top of my head, and mil by like 200 mil, I think. So nothing like it wasn't some giant beat. They barely beat it. But still, I mean, positive news in the retrospect if you're trying to find good things to overall find. Brian Nichols said, well, we have room for improvement. We're making progress as planned and with confidence we're going to be on the right track. He said that in a video. He had that he's seen a positive response to the early steps that they've taken, the tweaks that they've had, removing extra charges for non-dairy milk options, focusing on marketing on its coffee, and slashing 30% of its food and beverage items by 2025. I think that's good, honestly. I made a Starbucks entire business revision video on what I'd change about the whole thing. I think the food sucks. We've talked about it before, but I think the food is piss. Nobody likes it. There's a lot of opportunity I think they could be taking there, and they're not doing it. So definitely not something that's a bull thesis for mine. But I think cutting down on the menu and making things more simple is probably going to help them out. Yeah, they barely beat revenue and EPS, which I mean, it's still fine. It's still fine. Not good growth, as we're going to get into. Their net sales of 9.4 billion were unchanged from a year earlier. I don't know how you want to view that, if that's good or not. Same store sales fell 4%, fueled by a 6% in decline of traffic at the stores that they talked about. Wall Street was expecting a steeper drop of 5.5%. So I guess that's good. U.S. same-store sales slid 4%, and traffic to its cafes fell 8%. So nobody's going inside a Starbucks anymore, which is like one of the big things they're focusing on right now. So nothing new there. They've been cutting back on deals, so its discounted transactions fell 40% of the quarter. I don't fucking get this. Look, you're paying $5 nearly for a coffee. I can go to Dunkin' Donuts, Tim Hortons, or a local coffee shop. I could probably I've multiple instances actually where I've gotten like 600 or 700 calories worth of food in different forms and a drink, all for cheaper than one coffee at Starbucks. How is that going to help you by reducing your discounted items? It doesn't make sense to me. And he credited the pullback in discounts for the chain's sales improvement. I don't get that. I don't know how that makes sense. Same store sales in China, its second largest market, fell 6%. It's just not good. They're very reliant on China. They need that to do well. So I mean, you're kind of gambling that they've been leaning in discounts in China. So that's good, but probably should be doing that in the United States if you don't want to bet on China. It's just a giant gamble at the end of the day. And its forecast for fiscal 2025, citing the turnaround efforts. Oh, they suspended the forecast, even better. So they're not gonna they'll leave us in suspense. So I don't know what people are seeing in this earnings report besides that it just was an absolute piss. Uh, Siren equipment in its busiest locations. Okay, ice dispense. Oh, cool. They got some. There you go. 31 times earnings. We'll go over some financials now. For full transparency, I sold some a few weeks ago at like $99 at a 13% gain. It was pretty much just the gains I had on the stock. It was like $300, $400 worth, so I figured I'd trim a little bit. And then today I sold 3 more shares at a 24% gain. So, I mean, some solid gains for sure. And I'm just going to index that money, and I put some into Uber as well because it's down on the day. I put it just SHG. Like, you asked me, put a gun to my head in 30 years, what am I going to get a better return on, StarBucks or SHG? I think the obvious answer is SHG. So I'll be happy. I know there's a little part of me that's hesitant to buy at these all-time highs and stuff with SHG, but it's been shown that it really doesn't matter when you buy as long as you consistently invest. So there we go. All right, finchat.io. I'll leave a link to this in the description. Really awesome tool that we have the privilege of being an affiliate with on the Cash Flow Kings podcast. So definitely, if you want to try it out, use our link, support us. We greatly appreciate it. Even better, the P is up for the day. 32.4p. Great news. Price to free cash flow of 39. I wouldn't pay too much attention to it because they do invest a lot, or they invest a lot in like CapEx and store leases. So I mean, free cash flow plays in the best metric to look at there. EV to EBITDA of 21.2, not ideal. Growth CAGRs have not been like, I don't know. You're trading at a 30 times earnings, and your growth over the last couple of years has been 6%, and you haven't even been growing the last like 2 or 3 years. So not the greatest thing you want to see. They had that dividend still, 75% payout ratio. It's a lot right now. 2.4% yield, not the most sustainable. They're growing that dividend pretty fast as well. I would prefer if they had more money to do buybacks, but clearly they're not at a good price for buybacks. If you would have timed this really good, like you guys remember, I was hammering the buy when it was down here. This was like peak Starbucks cult leader time. I think it's a fine time to get out right now. I'll be honest. I still have it as like a medium sized holding, but I kind of think this is stupid. Don't do what I'm doing, but I do think that there's going to be some more momentum going forward. I could easily see it getting to 120, 130, and I make a full exit there. But right now, I'm pretty much just trimming. It's still like I'd say around 7 or 8% of the portfolio right now. Closer actually, probably to 6. Now that I'm looking at it. Decent amount of debt. Once again, just a bunch of store leases. Return on capital employed, 23.2%. I'm really, really curious to see how that's going to pan out with these Chinese stores that they're building. So next 5 years, I'd say, are pretty big for that. We'll take a look at some of the financials right now. We'll do total revenues to start off because it's kind of a big thing that people like to look at. We'll go the last few years. Total revenues, they've been kind of last few years, they've not been that great. Like they've been pretty stagnant, but I mean, it's been pretty solid. 10.6% growth rate over the last couple of years. For cash flow, we'll look at it, but I wouldn't pay too much attention to it. I think adjusted free cash flow would be the better one. It's just been incredibly inconsistent because of how much they invest into stores and leases. So that's obviously can take a pretty big chunk effect on their free cash flow. Net income, I think this is the more accurate financial look at here. It hasn't been really good. Over the last 5 years, it has a 36% growth rate. That's just because 2020 was so bad. If you look at the last 4 years, though, it is negative 5%. So, I mean, just not ideally what you want to see when I think there's a lot better options in the market today. We'll look at some other financials. We'll look at we'll take a look at gross profit margin for the fun of it. It's declining. Inflation, obviously, here. They have a bit of a decline there, but just not what you want to see. I think they've absolutely maxed out their pricing power as well. That's one of the giant things that I think was really attractive with Starbucks back in the day. When you're charging $5 for coffee, you can't really get away with it with the way they have recently. It's unfortunate. I proposed a great idea that they just cut prices in general, and more people are going to come back to their stores. Doesn't have to be a whole ton, but I think it's a little ridiculous. People are paying $4 or $5 for coffee now that I'm like actually out in the real world, spending money on it, having options of where to go. We'll look at total shares outstanding. I believe they do buybacks, but I'd like to see if they have been buying back as of recently. Let's take a look. All right, we have a 2% buyback CAGR for the last around 7 years. Not horrible. Let's see if they've been doing any recently. Not really. So, I mean, 75% payout ratio. I mean, you're kind of limited in what you can do. Let's take a look at. Actually, I want to look at the we'll do segments and KPIs. Food revenue. We were talking shit about the food. It's been okay growing, kind of like everything else. Has been kind of stagnant the last 3 years. Beverage revenue, that's probably the big one you're looking at here. Stagnant for the last 3 years. So that's just a repeated trend with everything here. Like the last 3 years have been extremely stagnant. Look at North American revenue and international. Yeah, North American, it's just unfortunate, man. 8% growth rate over the last 5 years with international revenue, 12% growth rate with North America, probably inflated from C19. We'll see if we can. Yeah, inflated by C19. So it's not ideal. Look at some estimates here. Just analyst price targets. I'll say what I think about it. Analysts have a high in the company of 125, consensus of 104, and low of 76. So I think that's pretty fair. Yeah, that's actually reasonable. I thought I was seeing higher. Like I saw something on Google. It was like 34 analysts said that it's a strong buy right now. It's like, no, it isn't. This is not a strong buy. I think it's a sell at this point, honestly. Sell or a deep hold. I mean, I just think there's so many better options, man. I don't think there's anything else really to look at. Dividends, yeah, you can see they've been growing it. Total return over the last 5 years, we've 40% returns. I mean, you're underperforming if you own the last 5 years. I hate the 5-year metric, but it's really been kind of a struggle for them. And you got to look. It's like there's a Starbucks on every corner. It's where you're going to find your growth the next few years. China's the big answer, but you want to have multiple places to get that growth from, and I just don't see that right now. So, update: I've resigned as a Starbucks cult leader. I'm an I don't have a tribe right now, so I don't know. Maybe SHG, but I think it's already taken. So, it is what it is. I would more likely than not going to completely sell out. I'd like to see where it averages over the next few weeks, but not really impressed with the earnings report. Don't know why the stock is up. Figured I'd give me an update. But appreciate you all for tuning in. Smash the like button, subscribe. Check out the FinChat affiliate link in the description box and comment section below. Have a good one and do dividend stocks, not drugs. See you.